Thank you. Welcome everyone to today's edition of Frontier Open Prayer, the first edition in the month of October. Welcome my panelists today, Ayodeji Ebo, who is the senior economist and head of research and strategy at Greenwich Merchant Bank. Thank you, Ayodeji. Good morning. Welcome.
Good morning. Good morning.
Thank you so much. Coming fresh from Nigeria's Independence Day also is Onyeka Ijoma, who is an industrial goods analyst at Betiva Capital Management.
Good morning, Bosse.
Yeah, and the man who keeps working all through the week, Ali Kansachu. Your weekend starts right now.
Oh, yes. And I can stay out till very late, 11 p.m.
I understand. Thank you so much for making it on the program. We really appreciate all of you being here. Let's check in with the markets very quickly as we look at some of the top stories of the day. This was how Nigerian market finished off on Wednesday before the holidays, 0.83%, erasing year-to-date losses on the all-share index, a brand new level for the equity capitalization, 14 trillion naira. Again, we saw Ivory Coast market down almost 1%, 125.24 on the composite index. Egyptian top 30, 0.56%. And then Kenya was flat, 139.88, lost the 140 index reading. And South Africa's GSC 0.34% positive on Thursday, I beg your pardon. So let's look at Nigeria is only one with a Wednesday figure. The rest were trading Nigeria's independence. Let's go to East Africa, where stories are in this morning about the fact the country's National Oil Corporation, Kenya NOC, is owing about 5.3 billion according to Business Daily. Kenya is not producing so much oil. So I'm wondering where these billions of shillings in debt is coming from. Perhaps Ali has an idea where the country, national oil, which is not producing or selling oil, is ramping up so much debt. I'm trying to wrap my head around that story when I saw it this morning. Kenya's CIC Insurance get PwC as a new auditor in I'm trying to get Ali to explain the whole story around the Central Bank of Kenya expiry or suspension of the listing of negative creation for borrowers. Tanzanian bureaus in corporate news, revenue negative 9%. Again, we understand the story from the pandemic period. And Uganda's NIC first half 2020 insurance gross premium rating down 1%. Ali, let's hit the ground running.
So let me start with the first story you were talking about, which was
the
first story you're talking about, National Oil. National Oil, there were some big dreams for National Oil. One was to list it in London. It was intended that they should be buying some of the oil concessions when the excitement was at its peak. And Tullow Oil were looking to extract oil from Lake Turkana. I think essentially the movement lower in the oil price means Kenya as an oil producer is now definitely on the back burner. That is evidenced in the price of Tullow Oil, which has largely collapsed and is a proxy for that opportunity. And National Oil also had some other assets, some stations which they were selling fuel at a discount to the majors. It was quite an interesting situation. So, look, there have been issues around corporate governance, and now you hear the noise, and then you get the signal. And when you got debts of this nature, the signal is very loud and clear. This is becoming a little bit of a disease in the state-owned, in the parastatal sector. This is not the first example, there are others. And the question is, does the government have the envelope to underwrite all these parastatals? And it doesn't. And now you're seeing a point of stress develop. And KCB, all credit to them, tend to be pretty fast when they see it going wrong. And I think they're the ones who triggered the current situation. You were asking about the Central Bank of Kenya, and let me just say, Dr. Njoroge has been launching a very boisterous and coherent defense of the policy around the shilling. There's been a lot of debate about whether that's really a free market. he was highly critical over the last 48 hours about some reports around that, and defended the position of the shilling. There's been a lot of doubt expressed in the media as to whether this is a real price or whether this is a manipulated price. The thinking in the media is that the shilling should be weaker, and Dr. Jirodi, the central bank governor, is saying absolutely not. It's a free and fair market, and has been defending that position. With respect to the expiry of suspension of the listing of negative credit info for borrowers, this was something that the central bank had done, which meant that if you had missed a payment or you'd had struggled in the last few months to make your payments on your loans, you were not listed at the Credit Reference Bureau given the COVID emergency. Now that remission has been lifted, so now you will be listed at the Credit Reference Bureau, which means that borrowers who've been struggling typically will be cut off now from borrowing from other banks or other avenues. So it's a big drain of liquidity on people at a time when the economy has been struggling, notwithstanding that the central bank governor is talking of 3.1% GDP growth this full year, which he mentioned a couple of days ago. Just to touch on your Tanzania brewery story, revenue down 9%. It's interesting. The Economist picked up on beer consumption as a GDP proxy for Tanzania. And Tanzania has been reporting GDP of 6% for the last 10 years or 7%. And the Economist was saying, if you look at beer consumption, it's telling you that GDP is a lot lower than the official figures that are being released. The Tanzanian government have stopped anyone else opining on official GDP data.
Interesting. Thank you, Ali. When we talk about the Credit Reference Bureau and what it means for borrowers, for loan defaulters, I'm sure that's a bridge that Nigeria seems to have crossed, as it were, isn't it, Ayodeji?
Yes, I think it's something that we have been able to achieve so far. But when you also look at, based on the stability Kenya also has, I think for us, we still have a lot to do to sustain that momentum.
Okay, let's talk about the Nigerian market space. We went into the public holiday, Independence Day, a whole lot of accolades, goodwill messages for Nigeria, celebrating 60 years of independence. AFDB's president, of course, is Nigerian born, by the way, head of the AFDB. Additionally, had a message. The central bank governor reiterated in his own message why the central bank is continuing on the path of development finance policy to return Nigeria to economic diversification, which the country had at independence. The CEO, the chairman of and former CEO of Zenith Bank, the head of Access Bank, Herbert Wigwe, also among those who saluted Nigeria. The market is reopening today, but the news over the holiday, Independence holidays, the Fitch ratings are affirming Nigeria at B and revise the country's outlook from negative to stable. In Ghana, Mechanical Lloyd PLC says it's delisting from the stock exchange in Accra, while the Bank of Africa, based in Benin Republic, says its net income was 1.56%, moved to 8.08 billion CFA franc. And West Africa Rating Agency affirmed a long-term rating of NCIA Bank, which is listed on the BRVM. A quick one, Onyeka, on these Fitch ratings on Nigeria. I'm particularly interested in the outlook from negative to stable.
Yeah, thank you very much, Wasim. The news about the Fitch ratings, it actually came, as a shock to a couple of people, because the country is still navigating a lot of the murky waters that the pandemic has basically thrown us in, and according to the firm, the ratings agency, The main reason is because of a more stable outlook for crude prices, even as even as the agency continued to talk about the issues regarding the country's exchange rate policy. It, however, noted that there had been the central bank was working to create some level of unification among the diverging exchange rates, evidenced by the around 19% devaluation that we've seen so far, and the rhetoric of the CBN governor that they will do more to unify the exchange rate. But when we look at the stats, when we look at the metrics, Nigeria's foreign currency position, when we look at the body language of the CBN and the federal government as to how they plan to do it, it doesn't seem like we have a very coherent plan on the unification at the moment. If I recall correctly, about yesterday or 2 days ago, we saw the good news about the 2021 budget.
Okay, I guess we lost Onyeka there for a short while. Let me quickly ask Ayo here at Greenwich Merchant Bank. Ayo.
Yes, I think I quite agree with Ijoma. It came as a surprise because we've not really achieved much regarding. We've not really achieved much regarding even the FX. Based on quoting them that we've achieved a two-step verification of a depreciation of about 19%. But we feel we still have a long way to go. And also for them, they also alluded to the fact that they are not able to ascertain the pent-up demand, and that as at August was around $10 billion, which is significant. And we know what signal that does for the foreign portfolio investors. So for me, it's still a major surprise because for the foreign portfolio investors, liquidity is key. So if you cannot determine when you come in and when you can go out, it increases the amount of risk or premium that you place in that market. CBN has increased the intervention at the investors and exporters window, but we feel it's still a long way to go. And you also want to look at it in terms of the revenue. The budget based on the 2021 budget, if you look at deficit, is still around maybe 5 trillion. But most times when you check the actual deficit, will be very significant, can be close to 7 trillion. So we feel that we are not out of the woods yet, but it's always based on a rating, is always a criteria thing. They check the box, and maybe we've been able to meet those technically. We've been able to meet those criteria, and that's why we're seeing that revision from negative to stable. But by and large, it's still very, even looking at the PMI data, it's still reduced from what it was in August. In August rather. Yeah. So we feel that there's still the challenge there is still staring at us in the face, and we've not really achieved any major stability.
No major stability. Ali, let me ask you this: Nigeria is due for at the World Bank. The last we heard, sometime around June, July, is that we're due for an executive board of the World Bank to review Nigeria's request for 3.3 billion US dollars, first tranche, $1.5 billion. It was to come in May, then it was deferred to July, then it deferred again to October. We're now in October. We don't have a date when the executive board of the World Bank will meet to consider Nigeria's budgetary request. So do you think if this Fitch rating says that the outlook of Nigeria is moving from negative to stable, do you think the folks in Washington would take this a little bit as a signal that all is well, good to go?
So that's a very interesting question, because there's been a kind of media blackout, hasn't there, for quite a while. We haven't heard anything on this point. I was under the following impression that there was pressure on Nigeria to normalize the foreign exchange rate. And until the multilateral institutions saw some kind of movement in that direction, that they were using this loan and the disbursement as a means of leverage over the Nigerian financial authorities, was the impression that I take away. I think clearly now it's important that Nigeria engage substantively, that maybe the president now starts to put pressure on the World Bank, because from a liquidity point of view, I think it's highly required as a booster shot for the Nigerian economy. So it's a positive move from Fitch, but I think ultimately the real nub of the issue is around the foreign exchange rate, and the fact that the IMF and the World Bank would like to see more of an Egyptian-based model than the current Nigeria first model that's being deployed.
Thank you so much, Ali. Let's look at Southern Africa, where the PMI for the month of September came in 2 days ago, printing 58.3. That's much bigger than 57.3 in the month of August. But the jobless numbers, which we saw on Wednesday, spoke to about 2.2 million in the same month of September. I will try to get a sense of this. While the electricity generation in South Africa went down 2.4% year-on-year in August. Harmony Gold is buying Poneng and Mine Waste from AngloGold for $200 million. A whole lot of consolidation and asset buying still going on within the gold industry. Again, these folks are seeing gold prices heading back to $2,000 early today on the news that President Trump and his wife's got the virus and they're quarantining for 2 weeks. In the hospitality business, Silver Sun is acquiring 100% stake of hospitality, and in South Africa and Zimbabwe are resuming international flights today. How soon are we heading to SA or Zimbabwe? Ali, let me ask you first.
Oh, well, those are great destinations for us on this.
I know, the parks.
I noticed they're not allowing the Americans or the Brits in. South Africans, but I think both South Africa and Zimbabwe heavily dependent on tourism, and we'll be hoping that there's a fast snapback in tourism numbers. We've spoken about this before. It's a lot to do with behavioral economics, and the question is, are people going to embrace tourism rapidly? And that the jury's still out on that. I think you need these 15-minute tests to make people feel comfortable just ahead of them getting on a flight. We probably need some insurance as well. But this is good news. Let's accept it for that. South African PMI rising further to 58.3. This PMI number is quite an interesting one. We expected a rebound, but 58.3 would probably make you think the economy is going gangbusters. It's really more a month-on-month comparison, so it's an improvement. Let's take it for that, but it's not as eye-popping as it might look. South Africa electricity generation falling by 2.4% year-on-year in August. Look, electricity generation has been a big challenge in South Africa. We've known about that. I mean, in some ways they got lucky with the lockdown because demand must have gone right down. But the fact that generation is down is surely a concern. Harmony Gold speaks to, as you mentioned, the gold price got a little bit of a pop on that news of President Trump and his wife getting coronavirus. I know we were discussing before the show, some people are saying he's going to make a miraculous recovery in 2 days' time, call himself Superman, and it's a conspiracy. But we wish him and his wife a quick recovery. But we're going to see a lot more corporate action in the gold sector, aren't we? Because you've got probably the best cash flows of anywhere in the stock market is in that precious metal sector because of the uplift in the price. So we can expect more corporate action, I think, as we move forward.
Yes, we expect a whole lot of corporate actions. IDG, in terms of PMIs, what's your take on that? This is South Africa's printing 58.3. The last two numbers for Nigeria still looks a little bit soft. Analysts are raising a couple of question marks on it.
Yes, interesting. You know, when South Africa, when they were posting very low PMI, Nigeria were using them as a reference point that were not the lowest when we're and now they've been able to rebound faster than Nigeria. We have still remain sticky within the contraction region. So it just calls it's questionable, and with all the interventions, with all the supports, so we are yet to see any major rebound. And for us, what we can maybe link that to is we can see that significant surge in prices. So that will affect demand. And once the demand is affected, the production level will be affected. Also, the number of employment that can also be generated will be affected. So we know where the problem is, and we need something to maybe spur up that the demand in the. So I won't say so. I'm putting something. We need a policy. So the interventions is right, is fine, but the private sector also needs to come in. So a lot of maybe construction needs to be going on with the support of the private sector. Like yesterday, we were excited to see flour mills also trying to take a major part of the road. We can see what Dangote is doing within 1.5 or 2 years. It's almost completed that number of long kilometers of road. And if it was to the government, it can take 3 or 4 years. We'll continue to budget for it. So if we can get more private sector involvement, we need how do we generate cash into the hands of people so that demand can be spurred. So if we don't achieve that, that would continue to just operate in a fragile manner. And we know even before pre-COVID, our growth rate was still lagging behind our population growth rate. So which means that on a day-by-day basis, we have more people going into that poverty level. And in terms of standard of living, continue to deteriorate. So there's a lot that needs to be done, but government does not have that capacity to solve this problem. It's a deliberate effort to bring in the private sector guys, provide that enabling environment, both for the domestic private sector guys and the foreign guys, solve our FX issues, then we should see a major rebound maybe towards the end of the year.
Thanks. Oyeka, we can't discuss PMIs without the industrial goods sector, can we?
No, you definitely cannot. As manufacturing plays a huge, is a huge component of the PMI, having its own purchasing managers index altogether. We note, for example, in South Africa that across almost all the sub-indices for the both manufacturing and non-manufacturing PMI, but especially manufacturing PMI, were largely positive. That's over the 50-point mark. However, we still saw a bit of weakness in the employment index, which still speaks to the employment numbers that we have seen from South Africa so far. But overall, even though it's still an ordinal index, we are still seeing this is still a very positive development for South Africa concerning their PMI.
Okay, thank you. Oyeka, let's touch on North Africa. Then you give us a sense of your outlook for October as we start in North Africa. The Bank Misr is settling 2.85 billion Egyptian pounds in bad debts. The bad debt story is still hanging around Africa's banking sector. Bank of Africa in Egypt has done a capital raising via optional conversion of dividend. The figure now has gone up for the country, for the bank. That's good. Meantime, the Bank of Al Maghrib says bank credit annual growth rate was at 4.9% in August. On the Egyptian stock exchange, IMEX has acquired Nile Cotton Guinea for that sum you see there, a little above 2 billion Egyptian pounds. Ali, give us one or two cents of the North African story around Egypt within the banking space?
So, I mean, you know, the Egyptian banks are well capitalized in most cases. And when you're settling up 2.85 billion of bad debts, it's telling you that you have the firepower to do that. You're not kicking the can down the road. I think, you know, the Egyptian banks, as far as I can see, have the highest exposure to the local market, which is paying them very handsomely in local interest rates. They remain a very strong banking segment on the continent. Recently in Kenya, we had a partial acquisition of one of our tier 3 banks via an Egyptian bank. So sophisticated capital markets overall, and I think they're pretty well positioned going forward. Just to touch on one other story I saw there, Bank of Africa capital raising done by optional conversion of dividend. I think we'll see a lot more of that, where basically banks will say to their shareholders, we don't want to pay you cash dividend, you know, you take it in more equity. So I think we'll see that as a clever ruse to help banks shore up their balance sheets as well.
Banks always have a way. They say if banks are holding your cash, then, well, you better pray you give it to you. They can decide what to do with it. Once it goes into the vault, then the story is entirely different. That's how banking runs, by the way. Okay, so give us a sense of the month of October, IDG, in less than 1 minute for Nigerian markets.
Okay,
What's
yeah.
the
So starting with the fixed income market, we will continue to see that continued demand in our market, and as a result, we expect yields to still remain subdued within current levels, if not lower. We saw the 364-day on Wednesday went down to 2.8%. We feel that this continued low interest rate would be making a compelling case for equity. So for most investors now, would have to sit down and be deliberate in taking on more risk. Rather than just stay with your T-bills and inflation at 13.2%, it means that you continue to be worse off. But and that's what we can see for equity. So we believe that as we even expect the third quarter results or audited results from next week, we'll see that sustained momentum, except if we see any major surprises from most of the corporates in terms of posting negative returns, so negative growth rates. But we feel that based on second quarter results, which was fairly or likely positive, we feel that they should be able to sustain that momentum with the opening up of the economy. And that we feel that like the way we experienced that positive close for the month of September, we should be able to achieve that in the month of October.
Thank you so much, Ayodeji. Onyeka, what's your take on the month for as we get started today?
Yeah, very, very similar to Ayodeji's expectations. In the fixed income space, there's nothing suggesting that yields will make a rebound. We still expect that yields will continue to remain pressured, and we might even see a further, downward movements when we see the next PMA, as has been the MO, in the past at the past auctions. The equity market continues to have very positive momentum, which is interesting because fundamentally nothing much, has changed in that space. It does seem like we're seeing a lot of the investors in the fixed income market to move their investments to the equity space, especially the domestic investors. Given our expectations for yields in the fixed income market, it makes sense that we will continue to see improved levels of activity in the equity market for this October. That said, but the fundamentals of the equity market has not changed significantly, and so we don't expect a meteoric rise or a meteoric rally in the equity market, this October.
Okay, welcome to October and the final quarter of the year. Thank you, everyone. Nalikan Sajo, CEO and founder, Rich Frontiers Management in Nairobi. Thank you so much for your time today. Have a great weekend. Ayode Jebo from Greenwich Merchant Bank. Thank you very much. And Onyeka Ijema from Vativa Capital Management. Thank you so much. We appreciate your time today. Lay back, enjoy the weekend. We'll get together next week. Thank you very much.